Good morning, everybody. Welcome to today's episode of Market Check, brought to you by BB. A reminder, as always, there is no second best daily YouTube live stream to talk about these markets. Welcome, guys. It is a big week, big day. First day of the quarter, first day of the week, first day of the month. So we have quite a few candles that we are now essentially kickstarting here, right, over the next few weeks. Even over the next few months, I have to imagine that this quarter is going to be very pivotal, given that, the last quarter more or less was sideways for a lot of altcoins. It was down. Contextually speaking, I do think that Q3 is an important quarter, right? We're going to set the tone, I think, very early on. Obviously, we're going to give our thoughts kind of more on what we're expecting here over the next few weeks. And what you can get to maybe get excited about or dread going forward. It is a big, big week. But I'm Snorlax. You guys also know me as Tommy. I'm joined by Chef Jackus and Dr. Will's Outlook. Welcome, guys. Hope you all had a fantastic weekend as well. Before we can start cooking, before we can start sharing the alpha, and I always say Monday shows, guys, sometimes they're the best because we just sit on alpha. We're stirring on our thoughts for basically an entire weekend. We are ready to cook for you today. So if you can hit the like button for us, we would love to provide all the alpha that we possibly can. We always appreciate when you guys give back. It would be sick if Bitcoin could finally put this low in and we hit 20K subs on YouTube kind of around the same time. That would be pretty sick, in my opinion. But let's set the stage for the quarter, right? Bitcoin is at support still. It's been more or less in a mechanical downtrend on a lower time frame since since the middle of May. And it has given us these scam pops higher, often at the start of the week, that have gotten faded. And the downtrend has continued while altcoins have bled back to kind of that support that we hit the first time, right? I mean, this is just kind of a natural range rotation for a lot of assets within crypto. But it's a little bit different now, in my opinion. This time is different. Don't quote me on that. But we kind of talked about it a little bit on Friday. Over the weekend, though, I think the positioning got a little bit more skewed as well. There is a Binance ape that is really filling these longs up here, basically filled half a yard worth of Bitcoin longs. It might not be one entity, right? But when you kind of see that same flow during the same weekend from the same entity, it's safe to assume that they're probably somewhat related. And the question in crypto, when you see abnormalities in order flow, is always, okay, who is he? Is he an insider that knows something? Or is he potentially going to get hunted for this position? I guess we'll find out. But the levels on Bitcoin that matter the most to me, 60K above it, you look great. Above 64K, then I think that the bottom is officially in. Below 60K, obviously, it's another conversation. We kind of touched on what would happen with that on Friday's market check, so make sure to check that out if you haven't already. But right now, I think this, weekend scam, maybe it's a weekend scam. I feel like some of the most famous moves in crypto have historically been started by weekend scams. So I am kind of curious to see what ends up happening with Bitcoin, of course, at these levels. But I think if you can flip 64K, then the crypto market looks quite rosy. You've got the ETH ETF coming up as well. Some of these shit coins have a great bid under them, talking specifically things like MOG, some other meme coins. But yeah, I do think that the market is probably going to want to take more risk this quarter than it did the last quarter. You're already seeing, I think, this emphasis as well in equities. Maybe not necessarily today. It's a Monday, but equities have kind of been front running this move on crypto more or less for a few weeks now. You have every major NASDAQ tech stock breaking out of a multi-month range near all-time highs. Does that sound familiar? Yes, it does, because Bitcoin and ETH are doing the exact same thing right now. They are consolidating near all-time highs in a multi-week range. How will it resolve? I really think we're going to find out here over the next few weeks. But like I said, guys, we're going to break it all down for you. So if you could hit the like button, and as I said, we will do our best to cook you up a delicious meal today. But let's get into the charts. I really want to get y'all's thoughts. It has been a while since they've scammed it on a weekend and added this much open interest. at a typically illiquid period. That usually represents somebody knowing something or somebody is way offside in their positioning. What are you guys kind of thinking about how you're seeing the markets right now, Bitcoin, altcoins, stock market, as we head into the third quarter of this year?
All I'm gonna say is we did say get it close above 60K body wise. Look for this thing to hold. And what did they do? They shoved it. They shoved it last minute. They're like, sorry, Bears. We know you guys put in all your money here at the lows. We're coming to take your house, your car, your family, everything. And some of you fell for it. Some of you fell for it. I mean, you can't make it any more simpler than that. Yeah, I mean, granted, you need confirmation higher for sure. I think there's a sweep possible, right? That's something I talked to you about this morning, Tommy. And after Jack is, finishes cooking, I'll talk about the sweep. But I don't think the sweep's going to be anywhere near what people are expecting, right? Yeah, I think sweep maybe at the 60K range, and then a rip. And we've played this same tune before. This isn't the first time this has happened. So especially these run ups into the monthly open, and then we run right back down for the low, and then a rip for the upside after that. This is not the first time that has occurred, and I think that that's a good potential in this. It's a bit of a lower time frame play, I think, but like even on the higher time frame, you can see the same play out. It happened up here at the highs, and I think that's going to happen again. So, I mean, I don't know what do you got, Jacka? Since you already had the chart up, I'll let you go ahead and cook on that, and then I'll kind of discuss what I think is going to occur here.
Well, hello guys, and yeah, I mean, we had a quite interesting weekend price action, which I think is considerable to note because usually weekends are like, especially nowadays, are like super tight range, $100 range for Bitcoin, which is insane when you have moves such as 1,000 being very normal on a daily basis for BTC. Then usually weekends are like nobody cares, right? And I think I kind of like it because like I want to enjoy life over the weekends myself too. But this weekend was very different, and it's been some shenanigans we saw in the market as usual. When we had as you mentioned it, Tommy, we had 6 months, quarterly, monthly, and weekly, and obviously all the other time frames closes happen in the same day. Like that doesn't happen often, right? Because sometimes you can have a weekly close in like Thursday, right? So not only do these levels will mark a significant level in the market, but also they did some shenanigans because it happened on Sunday, this close, which is a weird for a market that trades 24/7, but not on all exchanges, right? So some people saw that like the Friday close would be it, right? They something lower, they made you feel
chopping
like,
up
hey,
a bit there.
Yeah, trapping up people on the Friday close, thinking that this was it, that nothing is going to happen over the weekend. And then guess what? Over the weekend, they produced one of the largest weekend moves in a while, I would say, and that's significant. They saved the monthly, weekly closes all around, and that's very important because now it gives a room for everything that we've been anticipating. And obviously, there is still more work to be done. Absolutely. As I was reminding to everyone this morning, this afternoon, and in the past week, do not get cheerful until we reclaim, 65K. And obviously, the level is more like 64, but I will see slight move above it, right? So until we like reclaim that, I wouldn't be cheerful just yet. But given everything, given the all-around market context that we've been outlining for the past weeks and months, I think it's fair to assumption that is going to happen. Looking at ease and so forth, it's there, it's out there for the anticipation, with the probabilities. But yeah, let's not get cheerful until we get it. But I think the moment we do, and I think it's going to be probably this week, then if we do get it, then bears are, going to get raped.
Yeah,
we are right at the Berlin Wall, gentlemen. If we can reclaim this level, we're going to get that value rotation higher.
I really think that at this spot here for me, this is going to be a rejection. Bears are going to get really freaking loud. They're going to sweep 60K again, and then Bears are going to get obliterated. Those, like, anybody who thinks that this is not going to be a trap, I don't know. I don't know what to tell you. I think there's a trap setting up here. When you get a second, Jackets, if I could grab the chart, but I'll let you finish cooking first before that happens. Are you done, Jackets?
Yeah, I'm done. You can cook.
Okay. All right. Cool. Is this hold on? This isn't even Jackets' chart, is it?
That's my chart.
No, it's Tommy.
Oh man.
You should know by now, Will. You should know by now.
You don't recognize the uniqueness of my candlestick?
No, I saw you using the little brush tool, and I was like, Jackets isn't using. He's not the one operating. Like, Jackets doesn't use the brush tool.
I am behind the wheel.
I used to use the proper squiglet, but then I started to use the
arrow one.
Pass. The arrow. It's called pass on TradingView because it allows you to.
It is cleaner.
Modify the squiglet. Yeah, it's clean.
I always say you can tell the if somebody's a veteran or not based on their proficiency with the brush tool on TradingView.
Yes, yeah, that's why I like to use it. That's why I like to use it. I kind of revealed the alpha a little bit, but again, I think that there's going to be a little bit of a sweep here, to be honest with you, and I'm very bullish, right, by the way. I'm very bullish, but I think there's going to be a bit of a sweep and then a rip. That's what I think is going to occur here, and the reason for that is because we got the open the way we wanted it. We just, in my opinion, don't have enough wick here, right? We don't have enough wick there, and I think like you want volatility to reveal itself. Like if they just run it from here, then there's nothing here, and now you're probably looking very bearish, right? Because if they run this up from here, it's more than likely a trap. And so I like to see decent size wicks, because decent size wicks, lows at the lows and highs means that price is getting tested. If price is not getting tested, it's probably a trap. That's the way I tend to look at these. So I think, like, personally, looking at this, I want to see them kind of go like this and then kind of start running it up, right? Start doing that. But I want to see this wick low first. And I think, like, if we take it from the perspective of the low, I think it's like somewhere in here. Like I said, like right around that 60K range. They come back, they retest all this liquidity one last time, and then push off it, use it as a way to kind of like create momentum and push up to the upside. But as far as weekly, monthly goes, bears are screwed. They're absolutely screwed. Why am I saying they're screwed? Look, this is what is this? What is this candle right here? This candle. This is a hammer. We've talked about these hammers many times. This is a high time frame hammer at the low. I don't think at all, like, even with this sweep and push, this is still a very bearish momentum type play. Hammers go up, right? They indicate reversal, whether it be at the high or whether it be at the low, and we're at the low. So, and when I say at the low, I mean of the range, for those of you curious, right? We're at the low end of the range with a hammer. We got the weekly close confirmation, as discussed. I said what, above 60K, right? We got above 60K. We got the close on the weekly. We not only got the close on the weekly, we got the close on the monthly, right? And I pointed out where support needed to hold. We went way above that. scam, manipulation. You can scream whatever you want. It still happened, right? It doesn't matter how you feel about it. What matters is it still happened. And this is why I said you can't be too bearish. You just can't. You're at support. I said at support, you can't be shorting. At support, you can't be selling. At support, you have to wait. And I said that if you wanted to be bearish, you had to wait for them to close below, wait for them to retest, and then you could take the rollover, which is what they would have done. But they didn't do that. They held the range, upper range. Now you're in a dangerous spot if you're in a short, because they may pull this back down. You may think that it's going to continue down, and then they're going to trap you, right? And then once they trap you, this thing's going to start moving this way. And you're going to get absolutely obliterated. That's what's going to happen here. That'll take, obviously, months for this to play out. But this is some important context, I think, for people to really kind of pay attention to here. What is the structure that needs to be identified? Highest high, lower high, right? Lowest low, higher low. That forms a pennant. That's what that creates. You've created a pennant here. Now you've got price bouncing and ping-ponging in here. A pennant is a continuation pattern. Continuation pattern means price breaks out to the direction that it originally came from. So it came from this direction. Ping, 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 breaks out. Here, I put an example for people who don't listen, right? Don't understand. So here's an example of a pennant. And as you can see, a pennant doesn't have to be perfect. It just has to start to show that squeezing position, right? That squeezing, that tightening. That's why I identified the highest high, lowest low, higher low. And I'm showing you that that's what's happening here. You're getting that squeezing. And so now we're starting to squeeze. And then the breakout. Squeeze. And then the breakout. That's what I'm anticipating here. I'm anticipating this to continue to be a pennant until it's not, right? Obviously, if it invalidates, then we'll revisit the chalkboard. But at the end of the day, I'm going to stick to what I see, and what I see here is a pennant. And if it changes, I'll change my thesis. I'll delete the whole thing, come back to the drawing board, and redo it.
We simply delete and redraw if wrong, man. Nothing else.
That's what you got to do. Yeah, it's really that simple. A lot of people think that you have to be right. No, I can be wrong. If I'm wrong, I just got to figure out where I went wrong and figure out what I need to be looking for next. That's basically it. I mean, not a hard concept. Not a hard concept. Now, why did this occur? That's kind of the question. Why did we sit up here and consolidate? Why didn't we break out like previous cycle and just go straight through? Why? Right? Everybody's like, why? It's something different. I'll tell you why. Okay? I'll tell you why. Look, where was the halving here? Halving right here, right? Let's clear the whole chart. Halving right here. Where's the halving here? Halving right here. Where did the halving occur here? We draw fib, low to high. Halving occurred where? It basically occurred at the 50, right? Delete. Come in here. At a low. Where did the halving occur here? It occurred at the 1. So what does that mean? Well, rather than doing this, because we front ran the market essentially and went much higher than what we did previous halving. What does that mean? What's going on in this range? Consolidation, right? We had to stop and consolidate. Why? Because we front ran it. That's why we had to stop and consolidate, because we front ran the market. So they have to, a market maker, if you, and I highly suggest people go read books on market makers, right? Just read a book on a market maker, understand how they operate.
Study read.
Exactly. Yeah, they study reading. Look, they also have audiobooks if you can't read. But I will say this. Look, you got a move, consolidation, a move, consolidation. Why does this occur? Why does this happen? A market maker has to distribute, and they have to do what? What else do they have to do, Tommy? They only do two things. They distribute and they what?
They accumulate.
Accumulate. There you go. They accumulate. So a market maker can never be off sides. So if they're ever off sides, they have to stop trading within a range and reaccumulate. That's how it works. So there was so much pent up demand for Bitcoin that instead of Bitcoin stopping at the mid market, Bitcoin ran straight for the highs, right? No mid market stop before the halving. It just went straight to the highs. What does this mean about the market makers' dollar to token ratio? Because they have to keep an even amount of both, right? So when you're buying, they're selling. So when you reach a certain range, they can't let you exceed that range, because if you exceed that range, now they're way offsides. They're buying the top. Market makers are not going to buy the top. They'll create a new range and they'll stop it wherever they can. So they'll just keep selling into you to stop the momentum of the trade, and then they'll range trade until they get enough accumulate, and then they push it higher. They have to reposition. So rather than just getting a straight parabolic move, we got up, accumulate, and then we'll get up again. And then distribute. Not accumulate anymore. Distribute. And then you get your ABC. And then that's your bear market. And then you get your bull again. It's really that simple. Not as difficult as people trying to make it be. So I think we have one more leg here. Your last accumulate is happening. And then your distribute happens up here. So study these things. These are really important things to really kind of keep in the back of your mind. But this is why we didn't get the parabolic move. We got a stock type price action movement. Stock. Think about that. Rather than normal Bitcoin only up, we got a stock move, because this was this, right? That's all it was. And then this ended up being this. We didn't really sit here that long, but we did here because we were way the hell higher, way higher. The market maker was way outsides. It was way outside. So the market maker had to halt trading. How do you halt trading? You sell the shit out of it until people stop buying. You pressure the volume. That's what you do. You pressure the volume. And they pressured the volume, and then they created a range. And everybody keeps claiming how we're going to come down and do all this bullshit. Look, they created a range twice. It's not hard to see. Range 1, right? And then up here, they created another range. Range 2. That's it. It's not hard, people. Like, it's really just a lot easier than people think it is. So from here, again, I think directionally, we're going to go up, but this is your range 2. This is your range 1. Tell me they don't look the same. Tell me they don't look the same. It's just smaller, right? It's the same exact move. The market maker has showed their hand, and nobody's paid attention. Nobody's paid attention to it. So it's been pretty interesting. I don't know what are your guys' thoughts on this thesis here?
I mean, the price action is very similar, right? Like it definitely could end up playing the same. And I think from the standpoint of like, hey, Butters, I don't know if you guys heard my cat, but yeah, no, from the standpoint of playing the range and the type of price action we saw, you know, Binance controlled the market very similarly last summer to this, you know. And it's kind of funny too, because when we had almost $500 million in open interest come in from Binance over the weekend, my first thought was not to assume that they were going to get hunted. It was actually to assume this guy probably knows something, because it reminded me of, the range that you pointed out, Will, because before we ended up breaking out, Binance put on a lot of open interest and Bitfinex put on a lot of open interest. And those are two exchanges that we've kind of had a bit of an underlying bid on here over the last few weeks. So people can talk about Larry Fink and the ETFs and flows as much as they want, but the entities that still run these markets are Binance and Bitfinex, period. And end of discussion.
Yeah, I think CZ is an interesting topic. I don't think he's out of the market. I think he
Oh,
works from
definitely
beyond the
not.
shadows.
Definitely
And
not.
a lot of people think he is. It's almost like Sam Bankman-Fried from FTX, who's in prison but still able to manipulate the market in many ways from his cell.
Right.
I definitely think that people need to understand that these guys have a deeper roots than what most understand. And I'm not saying, again, that it has to be the same song and tune, right? It doesn't have to play out to a T. I'm just stating that what I'm more or less trying to identify here is that the range has been set. The range has been set, right? And this is what I was trying to tell people when they were trying to say low 50s, low 40s, so on and so forth. Although I even entertained the conversation, said, hey, if you can violate these price ranges, then yeah, you can get that. But we never did. We never violated them. We got the monthly and weekly close strong, very, very strong. And either price is going to consolidate for a bit longer, or it's gonna take off. Maybe I'm wrong, and it's actually much quicker than what I'm anticipating, right? That could always be the case too, and we're going to take off a lot quicker than I anticipate. Either way, we just need to understand that we're at the low end of the range.
Yeah.
As far as a range trading goes, let's just ixnay all other opinions. Just range trading. If you were a data analyst, right, there would be 2 points you would point out here, and you can correct me if I'm wrong here, Snorlax, but I would point out this and this, and I would point out as a data analysis, right, looking at ranges, this and this. Would you agree with that?
Yes, I don't think within this uptrend there's been a pullback of larger than 25%. We're at about 22 to 23% right now.
So as a data analysis, I would look at it from this perspective right here. I wouldn't change my perspective beyond this unless there was proof of it. This is why I stated before, and I'm trying to teach the people in the audience something. This is why I stated, like, if you got the body close somewheres below this range, now you can start S-ing the bed, right? Because reality is, if you get below that range, you're probably going to come back and revisit this box. That's what's going to happen. So you need a structure break of the range, and everybody wants to front run the structure break of the range. Why? There's no confirmation on it. If you're going to downtrend, like what people think that you're going to do, and this is atypical, you get a break of the range, you get a retest of the range, which is your exit, and then you get a rollover, right, which brings you into the range. So your initial breakdown doesn't even take you down to the range, it just takes you below it. You then the market rebalances. You hope to God that you're going back up, but in reality, you're going to roll back over. That's just what's going to happen. It's the same thing that happened over here. Look, break of the range, aka right here. Hold on.
Well, I don't know if you saw, we got a super chat that's asking about that weekly RSI uptrend line here from Remy the Whippet. I know you've talked about this before, so I wanted to give you the chance to address it again, because I know that's a piece of your analysis as well. Like, we're not just at range lows here for Bitcoin on price, locally speaking, but also, RSI is at a pretty critical inflection point as well. If you're assuming an uptrend, you would assume that this holds.
Yeah, I think, I mean, look, we can even bring it down a little more, right? I think as far as trend goes, like you can see here, we didn't really tap, but this is the strongest position. We don't have to really tap here. You're close enough to trend. You look, either you're at trend, this is the hard part to tell, but then you'll be violating a little bit here, or you're close enough to trend. The point being is that this is where I would expect price to roll back up if it's going to. This is your bid. This is your bid. This has been your bid, right? And this is something that I pointed out. Remember, when we discussed it, I said if you just point out the lows on your RSIs of the trend, like let's just point out the trend lows. So let's point out the trend low, point at the trend low, point at the trend low, we'll point at the trend low, and we'll get rid of this halving, right? The halving was actually the detriment. So if we look at trend low here, low, low, and really low, but it was still in the downtrend, obviously, right? This is the initiator and reality of your bullish divergence. For those of you who don't know, your bull div occurred and started here. That's where your bull div occurred. What is a bull deviation or a bull div? It's basically when price is going in the opposite direction of strength. And it's usually strength is going up, price is coming down. Now you can get hidden and so on and so forth. That's just a different subject altogether. But there was bullish divergence on Bitcoin, bullish divergence hit, and that flipped the market. Never fade bullish divergence. From there, the bullish divergence remained your support. And if you look here, look at this pivotal point right here for Bitcoin, Tommy. That pivotal point right there on that inflection point of where the bull div occurred was your bottom tick for Bitcoin before it went into another parabolic move. Now
History
we're
tends
getting,
to repeat. Especially in crypto, history does tend to repeat.
now we're getting that same pivot point here that, granted, look, 1, 2, 3, 4, 5, 6, 7, slow grind up and then breakout, right? Multi-week sideways, basically 2 months of sideways and then breakout, and then 3-4 months of sideways right here, but we get verticum right here, then sideways, and then breakout again. Wouldn't it be funny if this just all repeated itself again?
It tends to, I mean, crypto is inherently very cyclical, right? I mean, we base this every bull market is more or less based around a 4-year cycle called the halving that usually lines up with liquidity cycles. But at the end of the day, it doesn't really matter what's causing the cycles, just that they tend to occur and that they tend to occur repeatedly. And I mean, this is the use of being able to look at crypto in hindsight, right? Like hindsight analysis is particularly useful for, predicting the future in an asset class that is very inefficient as a whole. But Chef Jackus, I'd love to get you involved here as well. I know you've got some thoughts after the weekend. I'd love for you to share them on Bitcoin, this range, and of course, any other altcoins or any other assets that you've got your eyes on right now.
All right. Well, hope you guys can hear me better now. Sorry, I was dealing with some stuff in the background in the meantime.
It's a little choppy, Jackus.
A little choppy.
Robo Jackus.
Yeah.
Yeah, I gotta go back. Sorry, wait.
You're good. You're good.
I had to go back to the other mic. Anyway, it just is what it is right now.
Oh man, well, hold on, Jackus. Before you say anything, Will, you know what chart you're gonna have to throw up?
Yeah, soybean. Let's go. Yeah.
Or even Dollar General. We got to get that like button number up, guys. We've been cooking a lot of alpha for you on a Monday. Bitcoin is green. A lot of these altcoins are green. It's the start of a new quarter. Come on, bring that energy for me. We need to set the tone early for the next 3 months, guys. But hit that like button. we'll keep cooking alpha for you. But until we see that number run up a little bit more, we're going to have to look at some pretty boring lower time frames. So
it is what it is, as they say. But yeah, Ryan, said it well. I joined in 40 minutes in, and we got 125 likes with 320 people. Just this is non-negotiable, unacceptable. Will was cooking here for you. Tommy was cooking. I also was cooking at the beginning for a little, and trust us, guys, it is not what we love to do, but it's how the incentive structure is set on the social media, unfortunately. So let's get it done. Let's get it done so that we can keep on cooking and enjoy talking the markets.
Do we just sit here and a certain number of likes?
Maybe. Yeah, maybe.
Just hit him with the stoic face.
Let's bump it to 200 and then stoic face.
I think they miss the abuse. I think that's what they miss. They miss me coming in and abusing them on a daily basis. And we may have to go back to that. Wabi's Wi-Fi Jackass. Yes.
Wabi
Jackass and Wabi. Jackass got his new Solana phone. He's trying it out. It's working out. All right, guys.
Tucker's actually got one of those.
Yeah, I know. I know Tucker's got.
He's like, buy a Solana phone, and I said, I already have one. And he said, no, you just have it to have it. I'm like, what?
No service, just have it to have it. Oh man.
Oh my god. Study Wabi's Wi-Fi, says Jake. Sources, right?
How's our like button looking?
I'm actually, guys, on my laptop, and I need to I'm running solely on a hotspot right now, so not the best, but I still think it's working quite well, given it's a hotspot, and I'm running on my laptop while being on the charts, while being on the stream, and so forth. So
the audience or the audio has gotten better since the last few minutes, so that's a good thing. We are at 175 likes now, guys. If we want to get back to cooking, 180 actually, 180.
All right. So we're switching over to corn for 180. So it's good.
Hello, Will. Hello.
You guys want some corn? Some feed corn or regular corn? What kind of corn are we going for this time?
Let's bump it to 200, guys. I'll flip the chart on them. All right.
We need 19 likes, guys. 19 likes. We're gonna drop a pretty insane amount of alpha today. I can already tell for a Monday show. So y'all got lucky.
You know what it was,
you
right?
Have to do your part. You have to do your part.
I wasn't being bearish enough. I saw the I don't agree in the comment section. I think that's wrong. My thesis right.
Disagree. Oh man.
Oh look, there goes Mike. Crude oil going to break out soon on 1 month. Equities will crash. All right, Mike. Let's look at crude oil. We're going to entertain crude oil because I think most people don't understand even how oil works. But they heard something from the janitor at some place that makes sandwiches, and they now are a crude oil expert, economist. Let's go to U.S. oil. Oh, we're on the 1 minute. Hold on, we got to dial this up. There we go. I mean, if I was on the 1 minute, I would think the same thing. Don't worry. Let's see. Crude oil is going to break out soon. Whole market's going to crash. So how is crude oil breaking out going to make the market crash? I need a definitive answer on that because last time I checked, crude oil breaking out means inflation goes up, which means assets go up.
It was revealed to me in a dream.
So if that's the case, then your thesis is wrong if it breaks out. Otherwise, keep in mind, crude oil has penetrated this high before, and it swung failed. So there's no confirmation of a breakout for crude oil whatsoever. Now I'll show you what you would look for if crude oil is going to break out, right? If crude oil is going to break out, see this nice little red line I got up here? You're going to hit that line, then you're going to probably reject, then you're going to break out because you're going to use it as support. That's how crude oil will break out if it's going to, right? If it's going to.
Crude oil is usually logging all macro assets. So when you have a crude oil that is still in the bottoming phase, you are basically in a place where oil is basically like Bitcoin when it was 25 to 30K range, maybe even lesser than that. Oil is still awaiting that break to the upside, like Bitcoin had to new all-time highs. But listen, so it goes like this, right? Nvidia is the leader. Then you will see the risk flow into Bitcoin, and the last is always oil. Oil always tops the last, and is usually when the market makes a top. Like Bitcoin already has a top while oil is still running. But the thing is that in the middle of a move, you still have Bitcoin is already running, and then oil will catch up, right? When oil is catching up and it starts to run, you will still have Bitcoin that keeps on running. The fact that oil is still so low is only telling you how early the market still is. I would be worried if oil was trading at 200 by now. Then I would be worried. Given it's not yet even at all-time highs, it's telling you how early this cycle we still are and how much time we have left. And you can even study how it aligns on the market, because trust me, I've done my studies. So I'm pretty convinced that oil goes to 200 in this next higher time frame move higher, but it's going to take a while. So, but yeah, just actually, didn't we say too much? What likes are we at, man?
I wanted to go back to the comment that he had here. He had a comment about they're going to sell your dumb tokens. Hold on,
Will doesn't miss any comment, guys. I just want you to know that.
Yeah, Will definitely does not. he's looking for people to attack. You should know by now.
Commodities gonna rip. People gonna sell your dumb token. Look, I know my tokens are dumb. Who cares? Your dumb tokens, and tech stocks will be sold off. Energy gonna pump. That doesn't logically make any sense. Like, tech stocks are relying on energy, so for energy to go up, tech has to be doing well. A lot of tech is software, which requires computers and requires freaking, what is it called? Servers, and requires places like Google and so on and so forth. So that's all energy related. So if energy is going up, then tech's doing good. Just FYI. Commodities is a bit different. So, like, I think what you're trying to get to, Michael X, I'll give you the benefit of it. I think what you're trying to get to is that I wouldn't use oil as this metric either, by the way. You're trying to get to that food and things that people use in real life are going to be more appealing to people, which is true, but only under certain circumstances. And those circumstances...
only invest in most fundamental assumption tokens like
Hold on,
cardio and so forth.
If you guys start shilling tickers in the comments, I know some of you are not new and you know this. If you start shilling tickers, we are going to ban you. This is your warning of shit of like garbage. But I didn't mean to
Sure.
interrupt you guys. It just had to be said.
No.
I've been seeing the same dudes do it over and over again.
You're good. So the point that I'm trying to get to is like commodities, they do really well in recessions. That's where they do well. Because guess what people are lacking? Food, right? Commodities. Items they need for every day, toilet paper, so on and so forth. What happened in the pandemic? What was the hottest commodity in the pandemic, Tommy?
Toilet paper.
There you go. Exactly. So in those circumstances, yes, commodities do well. But in the circumstances that everybody's rich, aka making money off the stock market, it doesn't just flip. It doesn't just flip. It will slowly shift to it, but it doesn't just flip like that. You're not gonna have some kind of everybody's looking for the Michael Burry. That's what everybody's looking for. It's not coming yet. Like people just you're too early. You're way too early to the Michael Burry trade. I would say if you're looking for Michael Burry, start sifting around 2026. Right, somewhere is 2026 into 2025. Start sifting for Michael Burry, and you'll
be later than that. Because if you look at like 1965 to 1980, I think more or less that's the time period. Like I know the tech bubble in 2008 with the housing bubble, we did essentially 2 major cycle tops. But if you look at the 1960s to the 1980s, we had 3. So it might even be later than 2026, right? Well, I mean, it's just the thing about, and I'm going to say this again. I had a friend who made a comment about it a few months ago, but if you believe it's like the Big Short psyoped an entire generation of people into believing that the best way to make money for believing that the system is a total scam is to try and short it into the ground, when markets over a long enough period of time will almost always go up. At least, they have over the last century or multiple centuries shit. But yeah, if you believe that the system is a scam, the best way for you to express that is to get very long, because why wouldn't they continue the scam for as long as possible? Shorting is a lower probability game to win, but it is, I won't say that it's one that you can't win, of course, right? And when you're right in crypto, shorting the market, you typically do pretty well.
Yeah, and I would say too, Mike OX, you said the global war. I'd never look. There's one thing I never bet on. I never bet on wars, because they tend to somehow always get solved. Tell me I'm wrong. Anybody tell me I'm wrong. Jackus, have you seen a single war follow through other than the invasion into Ukraine? Right, like other than that, have you seen a single war play out, or do they tend to like go behind the scenes, shake hands, unzip their pants to each other, and then like pass the money back and forth?
Yeah, I mean,
he's not sure how to respond to the last part of that question.
Yeah.
Will.
Yeah. But war is never pretty thing. But we know that the people at charge love it, because it gives them so much excuse for their politics. It gives them, so much power, and that's what they like, right? And yeah, it's but historically speaking, it's always like a it's just opportunity for powers at B to shake out people, to use narratives, but essentially the war gets priced in, and it's not like you do not have a global war, right? That's going on. You have economies around the world that are just even if you have a war at some country, you still have other economies that are just producing real well. And even if there is a war, someone has to be supplying it and so forth. So, and I mean, let's say there is a war, right? Like, where do you put your stop loss based on a war? Or what's your invalidation? Close of the war? Or how do you play it? So you still need to follow the chart. But yeah, anyways.
Yeah, the chart will predict a lot of that stuff. Like I know I hate to say it, because people always think that we're just up here just bullshitting, Like, oh yeah, this is a chart, blah blah blah, and then this is what's going to happen, and we're just making it up. No, we're following data. I feel like people don't understand what data is. Data is price points, right? Data analysis don't even look at charts. They don't even look at this. What you're seeing right here on your screen, they don't look at this. They go in and they look at a stock, and they don't look at a chart pattern. They say, for the past 3 months, this stock has been trading between $95 and $64. So on a high time frame, our expectations are that you will remain ranged between $95 and $65. And the way price has been appreciating at the lows, it's the same way we do it with charting. We've seen that it went from $65, and the last time it retested the low, it was $70. So we're anticipating that volume is pushing price up. So price should go up. They don't even look at a chart. They're just looking at the numbers, right? They're like, what are the low numbers? What are the high numbers? Are high numbers coming down month after month? Are low numbers going up month after month? In their head, in my head, it's a pennant. In their head, it's a tightening pattern. Did it come from the top or did it come from the bottom? Was price way up when we first started, or was it way down when we first started? So they're looking at it from a building liquidity standpoint, but numerically, right? We're looking at it from a building standpoint, but charting patterns, so on and so forth. That's why we cover a lot of this in patterns, so people can understand like what the range is, what you should understand for price. And here's the thing: if this right here were to play out again, let me show you, because I know we just discussed how commodities is going to be the thing and oil is going to be the thing. Do you guys see this? And then that, and then do you see this right here? And then that, and do you see this right here? And then probably that. I mean, this is years and years and years of data. Like, and again, it comes back to patterns, right? It comes back to patterns. Technically speaking, this should have been a breakout pattern, but it's a failed shoulder. That's what it is. It's a failed shoulder. Why? Because it had a higher position on the left before it came back up, fake like it was going to break out, and then fell over. That's a failed shoulder. Did the same thing over here. This one did a rising wedge, though. It was a lot more obvious it was going to break down. And then did this. And now we're back up here again. Now, granted, this should tighten if it continues to hold the range and break out, if it can hold the range. But it's going to come back down and retest, in my opinion. So if it's going to come back down and retest, oh, look at all those months that it could sit there and retest the low before it gets its breakout. That could be a long time you're waiting for this oil plan that you think is going to play here, if oil continues to reject under this resistance.
I'll tell you what, I look at that high time frame chart, and I see an asset that if you are not dead on right, you're going to get wrecked. So why, like, the margin for error in trading oil is pretty high. Let's be honest, man. You know, I forgot what it was. Maybe it was like gasoline, something else, but the real returns on, maybe it was gasoline. I don't want to misquote it, but were way higher than oil, and basically nobody talks about it or trades it, ironically enough, even though it's kind of, you know,
I think
it
it's
is
crude.
Is it crude? Hold on.
Yeah,
I'm gonna figure it out.
Yeah, I think it's crude though, because nobody bids crude, but crude is used for all diesel, all major equipment, so on and so forth. Yeah, I'm pretty sure it's crude. Regular gasoline isn't.
You said it's crude or it's screwed?
crude, not screwed.
Jackus, we got over 200 likes, brother. What are you thinking
All
about
right.
sharing some alpha here to finish out the show?
Yeah.
Why not? Why not? We have the Euros, right? France is playing Belgium. We gotta make that one. Let's jump into it. All right. I was
It'll
just
be a good
looking
game.
something
It
here
should be a
real
good
quick.
game. But
Should be,
France,
but what
Belgium
I
can create
learned.
chances, but France should definitely probably their defense. I mean, Belgium's defense is horrendous, so France should have a lot of fun with the ball.
They should, but what I learned from these Euros is that the games you would expect fun from are not that much, and the games you would expect least fun from are the most funniest or like enjoyable.
Now the games
I'm-
yesterday were awesome. They were awesome.
Yeah, yeah. And my tickets played out well. So on that thing.
What do you guys think about this gap right here? Because like this gap filled obviously to the upside and then came back down and filled completely. Do we have to fill this gap, you think?
I really don't think we have to. I think a lot of the reason that stocks open red to open this quarter is because TLT is down 2%. Typically, correlated very closely with stocks, and I believe that has something to do with the yen getting obviously obliterated against the dollar. But when the Fed starts to kind of ease, it will help Asian markets, and I think that will help global liquidity as well. So I think TLT is probably about to bounce, and with that, typically that correlation is going to be bullish for risk. And so, yeah, I don't know that Rivian has to pull back. Will this might be the weakest day of the week?
Yeah, that's kind of my thoughts too. I wanted to get your guys' perspective because I respect your perspective. I think that the other play is too, and I'm glad you brought that up because I actually forgot about it. But once rates get cut, that could definitely see oil prices actually come down, right? Typically, rate cuts will lead into cheaper gas, cheaper crude, and once that occurs, you would see oil actually start to drop as opposed to go up. The reason for oil up is because of rates. Rates is what's kind of floating oil for now. Every time that we've had rates start to get cut and systemic risks start to come into play, you'll see a big drop in oil, typically.
And I love the comment from Warren Buffett, who said, sorry, not Warren Buffett, from AZTV, but he quoted Warren Buffett, said that a bull market is like sex. It feels best before it ends. But you know what? After it ends, you are horny for the next one.
You're sitting there in the bear market fishing for the bottom the whole time. You're like, where does this end so we can turn this back around?
Oh, man.
All right. So I actually found some very nice Tucker Nightly lines, and I do not know if we have Tucker currently watching us, but he would love these. So listen. There was a comment which I actually have to find. I do have to find it because he was asking me what would be like a bottom of the next bull market, right? I just cannot find this comment. If it's one of you guys, if you can. Yeah, here it is. So he asked, now that we know, and maybe it's a dumb question, but what do we think the Bitcoin low would be after this whole bull market and alt season is over? So while we cannot say that obviously right now, I am pretty confident in one thing, and that is that this cycle, these two cycles actually are creating a base that is never going to be traded below, right? Because what is happening, like this price action, as boring as it is becoming a base for the future. And this is something that lots of people are not appreciating right now. Not just this one, but like this whole, right? this whole thing is becoming a base for the future, because whenever the price would, even if you were to get something like this, even if you were to get a bear market, this whole base becomes a huge, huge, huge support where the Wall Street bought also, and is going to be hugely defended. But this little one, right, that's right here. So what is probably going to happen is that we are going to break higher, and then maybe we are going to come back and retest it, right? And then probably, if that is the case, we probably never do come back down there again, because it got already retested. So the next bear market may look like something like this, right? It can look like something like that, exactly. Or you may just gonna get a violent breakout, and then maybe at some point you're going to come back and retest this one. But I do not think that we are coming back below these levels if we do break higher. Because again, this is going to be just a huge, huge base forever, right? Just like this was a huge base to never come back to, right? Basically, or like trade below, sorry, and so forth. So, and if I were to put in an example from, for example, the Dow Jones, right? This was a base the market broken through, kind of did a retest here and never came back to, right? Ever again. You'll never see a retrace down there again. So these are the huge ranges to look forward. And we are kind of forming one right now on BTC. People will only see this in like very future hindsight, right? Me, given how much time I spent in the chart, I know what is forming. Just like here, right? I was saying that we are creating a base right below this resistance. This is not a, by coincidence. Once we break higher, any retest is going to be a buying opportunity for higher. And here, like we could have came back and we did not continue. And when we were here, the context changed. And I was thinking we are probably not coming down there again, like right here. When we done this, right, I can tell right now that like we can, as of right now, we can never ever trade below here. Never ever. We are, if the market remains bullish and doesn't go to zero, then we are never below this level, right? If we break higher from here, then we never ever, unless you get like some very quick liquidation wick event, right? On some exchange like Binance US. And I know what Will is thinking right now about. But unless you're gonna get that, you will never trade below this wick, in my opinion. So, because this is future events unfolding right now. So I cannot tell. And by the way, we do not ever have to come back here, right? Like what we can do is like, you break higher, then you're gonna get a mild retest. You front run this level because that's where everyone wants to buy, and then you just keep on going for the bull market. Then you're gonna get bear market, but it's going to absorb all the sellers and then just continue higher. So I mean, like something like this. So, well, I cannot tell where like the next bear market bottom is going to be. I can tell that these levels are going to be heavily defended should they come in the future, right? And that's why, by the way, I always say that it matters so much how and when you get to certain levels. That is so crucial. So, and I was, by the way, before we traded here, I had two scenarios open, because when we started to go up, I was open to a scenario and I had this level marked in my chart. And I was saying that we could come back here and then, all right, so first of all, when we were breaking from this range, right, I had a scenario where we could go straight in a straight line here, distribute, and then come back and retest this. This was a case, right? Then, however, we moved higher. We came back to this level, swept it, and sent higher. The moment we did so, I knew that we are not going below this level again if we are bullish. So we could always come back here for now. That could still happen. I do not think so it happens, but it could still happen and not invalidate the chart. Right now, I know that if the market remains bullish, this support is never to get broken through. Because if you do, right, if you do, you break the market structure here, just like you did here, and all you're gonna get is a bounce and then death. Basically, there is no support here to revert this. So that's why it cannot happen. And that's also, and so by the way, coming back to this, right? So I had a scenario where from here, we break here, and then we could distribute a little, come back and retest this one. I also, however, had a scenario that if we break above this level, we will be coming back from above, retesting the level, which we have done so twice. There is no more reason to, I mean, there is a huge probability that from this support, we will be continuing now upwards, especially if we reclaim 65K. Bears have no place to get any attention at that point, right? And I think all their attention here was really just FUD engagement, because you guys know that I was bearish right here on this very big high, calling for a retest of this level, which we got, but working at this level with 44Ks was a pure nonsense, right? That was not on the cards. We can start working with these levels the moment we're going to get a breakdown of this one, but not until then. And so that's kind of my take higher time frame wise going into the future. And you really should be all studying this, because this is basically if I'm to put it side by side, right? This is basically our gold breakout, right? Lots of people are not seeing this, and it's not the same, right? Like this didn't go above here on gold, but it's basically the same. Like here you had more touches, right? So right now you are here. You are basically here on BTC, right? You will get this breakout to the upside, whether that happens like this, even if we were to be bearish, right? Or you're going to get it, which I think is going to unfold from here, but you are going to get something like this. Like gold is never coming back below this base. Never. It's never coming back below here. It's never happening. Forget it. It's over for bears that are telling you below here. Never. Right? I'm that confident it never happens. The same thing is going to be for BTC when it breaks above here. This base is super important. So that's that. But by the way, guys, if you are enjoying this cook session, don't forget to smash the like button. You guys know how that incentive structure works. But yeah, there is one more thing I wanted to show you guys. The Tucker Nachi lines. I hope Tucker is watching, right? But I'm really liking this. I am really, really liking this. Do you think it's a coincidence? We could extend this one up. Do you think it's a coincidence, right? Not much. Not much. Be prepared. This is a bottom. This is a squeeze. Once broken through, we're gonna run. NVIDIA already telling you we are going way high, right? I already shared this alpha past Wednesday. Be sure to study it. But yeah, NVIDIA is front running, Bitcoin is following, and oil is the last laggard. That's where I'm gonna end this cook session, guys.
Great stuff, Jackus. And it really does feel like all of these big tech charts. I've been hammering this point for I mean, has it been weeks at this point? We've been ranging for so long, but all of these big tech charts seem to be breaking out of their ranges. And if they haven't broken out, they look like they're set to break out. The one thing that they are not doing is breaking down. So through that context, it's just very difficult to be bearish, on Bitcoin and ETH breaking down from these ranges. But yeah, great cook sesh, guys. Great Monday show. We are probably going to be wrapping things up here. We've been going for about an hour and 10 minutes. But and yeah, Dorito, this is a great point too. Tesla loves running with Bitcoin. You know what stock looks like? It's about to put in a big green candle. Will was talking about this on Friday. Obviously, the strength in the EV market. Rivian is, it's only a matter of time before you see Tesla put in my opinion, probably put in a pretty big green candle to the upside and really break out. It looks strong. It looks very strong. And I think that's just ultimately going to serve as more of a tailwind for the NASDAQ. You have stocks that are in price discovery already, and there's all this talk about NVIDIA eventually pulling back. Maybe it does, maybe it doesn't, but a lot of these tech stocks are going to catch up too. And that will suppress any downside pressure that NVIDIA could potentially have on the indices. And if NVIDIA keeps ripping, well, for one, that would be pretty insane because it's already in parabola. But then obviously we probably see indices set that much harder. But I did say we were going to wrap the show up. We are going to do that now. Sorry, I'm having some stimmy and some carbonation now in my throat. But let's run through a few things before we officially sign off. We hope that you enjoyed the show. Thanks for hitting the like button today, guys. I didn't see how many we ended up finishing with. 240 it's an okay start to the week. It's an okay start to the week. I'm gonna expect y'all to bring it more later in the week, especially if we end up.
I am disappointed.
Yeah, I'm a little disappointed. I agree with Chef, but I have a feeling
No cook session for the rest of the week. I'm gonna leave on Wednesday, guys. I'm disappointed.
Wow. If you guys can bring it tomorrow, like really bring it, I think we can convince them otherwise. But But either way, guys, thank you again for tuning into the show. A few quick reminders. We have launched our official hedge fund, BB Wealth Management. That is a long short fund that, of course, focuses on digital assets. And we manage it in a way that takes into account crypto's historic propensity for asymmetric upside, as well as the investment risks posed in any market. It's like I said, we're excited not only that we can begin to trade this fund, of course, but also that we can offer you, the audience, the community, the opportunity to invest as well and participate. So if becoming an LP or an accredited investor is something that interests you, just make sure to reach out. We have more information in the description linked below. If you email us, we'll email you back, hopefully answer any and all of your questions. And we are, like I said, we're beyond excited. We think it's a great time as a whole still to be invested in this market. So not to forget the BB Academy, guys. I really think it's a tremendous value proposition when you have so many traders who have proven efficacy in the markets here over the past few years, and that all trade with very different styles. It's a great way to potentially, this course is a great way to potentially build up your educational base, maybe hone some of your existing skills. Maybe there's a tool in your bag that you were looking to maybe sharpen a little bit. All of these things can be honed through BB Academy. A lot of work went into this as well, right? Like the fund probably was something that we were working on for a year and a half. BB Academy was something that was about 8 or 9 months in the making. So we're not going to put out anything for you guys unless we absolutely believe in it at the end of the day. And I think the BB Academy is like I said, it's a tremendous value proposition at $4.99. Like it probably really should be higher, but we want to give you guys the ability to access that as we head into a bull market so that you can have a strong educational base, or like I said, continue honing and sharpening your current tool bag. But to touch on our programming here, Market Check will be back for another episode tomorrow morning at 11 a.m. Eastern Standard Time. I'm pretty excited to see what we're going to be working with Bitcoin here over the course of this week. So I'm looking forward to Market Check, looking forward to breaking it down with these guys. Obviously, we can cover pretty much any chart, any asset. We have a lot of fun doing it, as you all know. But shout out to the regulars for once again showing up. I know you will show up and show out for that like button later this week. Not to forget Market Talk with the legendary King Wabi. He always does a great job. I was hanging out with him actually this weekend. He's doing great. But yeah, make sure to tune in for Market Talk as well if you're just looking for a bit of an afternoon binge after market check. Got to get our fixes in, right? Market Talk is a great example of that. But Market Talk's timing can vary a little bit. So just remember to stay subscribed and following our Twitter so you can be notified, not just when we schedule our spaces, but also when we go live. But thanks again for tuning in, guys. Always enjoy doing this show for you, of course. And we hope you all have a fantastic rest of your week, fantastic rest of your Monday. And thanks again for tuning in. Have a great one, guys.